Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, August 5th. The stock market posted its largest percentage gain in 4 months on Tuesday in a broad-based rally that was aided by favorable wording in the Fed's latest directive, a drop in crude prices, and a better-than-expected economic reading on the services sector. All 10 economic sectors posted a gain, with 7 sectors advancing more than 2%. The S&P 500 surged 2.9%, as 91% of its components ended the session in positive territory. The Federal Open Market Committee left the Fed funds rate at 2% Tuesday and the discount rate at 2.25% as expected. The Fed noted that there are both risks to inflation and growth. The FOMC said that although the economy grew in the second quarter, labor markets have softened further and financial markets remain under considerable stress. Most of the directive was very similar to June 25th, when the Fed also kept rates unchanged. However, there were some subtle changes in the final paragraph. In June, the Fed said downside risks to growth remain, although they have diminished somewhat, and that upside inflation risks have increased. In the latest directive, the Fed said downside risks to growth remain, and inflation is a significant concern, removing the comments related to diminishing downside risks and increasing upside inflation risks. Traders took this as a sign that a Fed rate hike is not imminent, causing stocks to soar to their session highs in late afternoon trade. The FOMC decision, though, does not deserve all the credit for the market's rally this session, as stocks were already up 1.9% prior to the announcement. A portion of the buying interest on Tuesday was due to a 2.3% drop in the price of crude oil to $118.64 per barrel, which follows the previous session's drop of 3%. The drop in crude prices aided oil cost-sensitive areas, with consumer discretionary rallying 4.4% as the retail sector spiked 5.3%. Airlines got a large 9.4% boost, while transportation as a whole rose 4.9%. Conversely, the energy sector underperformed on a relative basis with a gain of 1.1%. The financial sector, up 5.1%, provided leadership throughout the session, indirectly benefiting from a healthy advance in European banks after Paris-based Société Générale reported better-than-feared earnings. AIG led the surge higher with a gain of 12% after being upgraded to buy from neutral at UBS. Earnings news was mixed, as Procter & Gamble topped expectations, while MGM Mirage, Molson Coors Brewing, and Archer Daniels Midland fell short of analysts' estimates. In terms of economic news, the July ISM Services report indicates business conditions are not as weak as widely reported, although conditions are still not ideal. The reading rose to 49.5 from 48.2 in June, which topped the average estimate of 48.8. Since the reading is below 50, it reflects contraction in the services sector, although the number is moving in the right direction. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.